Hello, fellow investors. Welcome to Fundamental Analysis. My name is Varun Kapoor, and I do appreciate you watching this channel. Up today, I wanted to discuss Baidu, Chinese giant in the internet space. So let's do some qualitative and quantitative analysis to see what kind of returns a long-term investor may be able to achieve. So let's dig in. So up first, what does Baidu do? So let's actually use some numbers itself to understand the business model of Baidu. Baidu has essentially two key divisions. One of them is called online marketing services. The other one is called, as defined in the annual report, it's called others. Online marketing services is essentially Google services that are available in China. As many of you will know, Google itself is not available in China. So the largest search engine in China is Baidu, and that is essentially the services that Baidu provides under the banner of online marketing services. Here you can see the revenue, the 5-year revenue evolution under the online marketing services. So it's gone from 64 billion, and this is in Chinese yuan. It's gone from 64 billion in 2016 to 79 billion for the latest 12 months available to the end of 2021. Now, what is quite interesting here is that you will notice that from 2018 onwards, so 2018, 2019, there was a slight dip in the revenue for online marketing services, which is the advertising services similar to Google. And then there was a big dip in 2020, but that was driven by COVID, so we can kind of ignore that. And then for the latest 12 months ended 2021, you will notice that the revenue has then bounced back to 79.8 billion Chinese yuan. So it's quite interesting to notice here that the revenue that Baidu generates is actually under pressure for its core business. That's because the competitors that are out there, the likes of Tencent, Alibaba, they are gaining market share, and the revenues that Baidu has been able to generate has declined. Having said that, the market share, in terms of market share for search engine, Baidu still remains to be the leading market share. Its market share is about 70%, and it does generate a very solid and strong EBITDA and cash flow from those online marketing services. So the other division, as per the annual report, is called others, and now others is made up of quite a few different things. It's made up of cloud services. It's made up of self-driving technology. It's made up of robotaxis, and that is essentially the part of the business that has been growing really, really fast. So just as a data point, the cloud services in China have been growing at an exponential rate. There are some studies out there that suggest that the cloud business in China as a whole is growing at a clip of 50% or more for the next 5 to 7 years. So it's really, really growing strongly. So while the legacy search engine business may be stagnating for Baidu, the real growth story here is others. The business has been growing really, really fast. As you can see in the numbers here, it's gone from about 6 billion Chinese yuan in 2016 to about 38 billion for the 12 months ended June 2021. That's a growth rate about 50% per year for the last 5 years. And as I mentioned, the industry itself is still growing at about 50%, which means that Baidu can keep growing very, very strongly in the next few years. With regards to the other division, the one thing that we should all keep in mind is that the management has said that they see cloud, AI cloud, robotaxis, self-driving, and other divisions that Baidu has to be growing much faster than its search engine business. In fact, management has suggested that in the next 3 to 4 years, the other division may actually be a larger division for Baidu than its legacy search engine business. And that will help us in forecasting some revenue estimates for this group going forward. One thing that we should all keep in mind is that although there is a strong competition in the Chinese tech sector, Alibaba, Huawei, ByteDance, there are lots and lots of these players. In terms of the autonomous driving capabilities, Baidu is one of the leaders. It has got into a collaboration with Geely Automobiles, which is a Chinese automobile company, and it has got lots of autonomous self-driving licenses out there, and the number of miles that the autonomous self-driving licenses have so far gained is a pretty impressive number. So not only is Baidu really strong in cloud services, it is got an edge against its competitor in as far as self-driving technology is concerned. So here you can see the total revenue for the group then for the last five and a half years. In 2016, the number was 70 billion Chinese yuan, and it's grown to about 118 billion yuan in the latest period. That's a compounded annual growth rate of about 12%. Let's look at EBITDA. The overall EBITDA for the group has more than doubled from about 15 billion yuan to 32 billion yuan between 2016 to the 12 months ended June 2021. The EBITDA margin has stayed essentially between 23% to call it 28% over that same period. So as value investors, we not only focus on profitability, and we in this channel look at EBITDA as a metric of profitability. We also look at the free cash flow available for equity holders, and as you can see in the numbers here in front of you, the free cash flow available for equity holders in 2016 was about 25 billion yuan, and that number has gone a little bit up and down. But then if you dig into the numbers, the periods in which it's gone down, that is in 2019, essentially is because the company was making acquisitions in that period, such that the cash was not available to equity holders. But over the last 5 years, the average cash available to equity holders is about 24 billion yuan, which is quite an important number when we think about forecasting the future for this group. So here, let's look at some valuation analysis for Baidu. You can see the market capitalization of Baidu in 2016 was about 57 billion. And although, as we discussed, the revenue has been growing at 12% per year, the EBITDA has actually doubled. The cash flow generation has averaged about 24 billion yuan for the last 5 years. The market capitalization of Baidu hasn't really moved. It's still at 58 billion. And in terms of the enterprise value to EBITDA, which is a key valuation metric that we look at, you can see here that the valuation has actually gone from 27 times EBITDA to currently at 12.5 times EBITDA. And the pullback in the recent share price is because of the crackdown in the Chinese tech sector, as some of you would be aware of. So we will dig into that a little bit more. So let's look at the forward-looking financial analysis of Baidu and see how we can project the revenues, profitability, and cash flow for this group 5 years from the current period. So here you can see in the first column, in terms of revenue, the overall marketing services revenue growth over the last 5.5 years is growing at an average of 4.8% per year. Now the competition in this segment is being very, very strong. The company, as we said, has had a couple of periods where the revenue has actually declined, although the company did return to growth in the latest period ended June 2021. Being a conservative investor, I have assumed that the legacy business only grows 1% per annum for the next 5 years. Keep in mind that the overall search engine business in China is still growing faster than 1%, which essentially means we're assuming that they will continue to lose market share to their competitors over the next 5 years. In terms of the other segment, here you can see in the first column, the average growth rate over the last 5.5 years is about 50%, as we said. Here we have assumed that it is much more conservative than the overall speed at which the AI segment is growing in China, and we have assumed a 20% growth rate, which is definitely achievable. I will point out that in the next 3 to 4 years, management believes that the overall other segment may actually be bigger than the legacy search engine business that Baidu has. And here you can see in 2024, that the revenue for the two segments is indeed very, very close. So in terms of EBITDA margin, remember that software businesses have lots of operating leverage, such that as businesses grow, the cost does not grow dollar for dollar, such that the with an increasing size of your business, your margins don't generally increase. And therefore, you will see here that the last 5-year average EBITDA margin is 25%. The last year EBITDA margin is 27.3%, and I have assumed rather conservatively that it stays at 27.3% over the next 5 years. And let's look at the free cash flow available for equity holders. Here you can see in the first column, the average for the last 5.5 years is about 100%. This is driven with the fact that company has made acquisitions in some periods. The company has taken on debt in certain periods. We have assumed about 65% free cash flow for equity holders over the next 5 years. Now, this is quite an interesting and rather conservative number, because if you see the average free cash flow available for equity holders over the last 5 years, it's 23 billion. But we are actually assuming that it goes down in the beginning to 20 billion or so, and then it increases over time as the business grows to 33 billion Chinese yuan by 2026. And this, I believe, is a conservative assumption. The reason for actually sticking to this conservative assumption is linking it back to the crackdown that we have seen in the Chinese sector. Some of you may be aware of this common prosperity fund that the Chinese government has suggested, and likes of Alibaba have been asked to contribute to that fund. Now, it's a bit unclear on how Baidu will play a role in that, but my estimate is that keeping this free cash flow available for equity holders lower, much lower than historical numbers, will essentially account for that, such that the company can use its free cash flow and contribute to any tax or any common prosperity fund that it may be asked to contribute to. So what do these revenue, EBITDA, and cash flow assumptions mean in terms of the exit valuation in 5 years' time? The average free cash flow yield, which is free cash flow for equity holders divided by market cap over the last 5 years, is about 5.7%. Assuming that the group has 33 billion in free cash flow in 2026, applying a 5.7% yield gives me a market cap in 2026 based on free cash flow methodology of 591 billion yuan. The other methodology that we look at is enterprise value to EBITDA. The last 5-year enterprise value to EBITDA average is 18.4 times. The current is 12.4 times. You can see that the current valuation is much lower because of whatever is happening in the Chinese tech sector. And being a conservative investor, I have assumed that in 5 years' time, it stays at 12.4 times. And that gives me an enterprise valuation of 636 billion Chinese yuan. And I make some assumptions in terms of debt at that particular point of time to give me a market capitalization of 590 billion Chinese yuan. So we have used two methodologies. One of them is free cash flow available for equity holders. That gives me a valuation of 591 billion yuan. The other methodology we have is enterprise value to EBITDA, and gives me a valuation of 591 billion yuan as well. So we get similar number in both methodologies, and therefore the best estimate of market cap in 2026 is 591 billion yuan. So let's look at the IRR analysis. As you can see in the first column, the current market capitalization in yuan is 369 billion yuan. And then you get a cash flow stream. So this is the free cash flow available for equity holders. And that's the 21 billion to 33 billion that we talked about, which I think are conservative numbers. And then in the exit column, you can see 591 billion yuan, which is the valuation that we just arrived at. It gives me a IRR over the next 5 years of 15.6%. So this is quite a solid IRR. I do strongly believe that my assumptions are quite conservative. As an example, I have used revenue growth rate of 20% when the industry is growing faster than 20%. I have used EBITDA margin of 27%. In some historical periods, the company has achieved higher EBITDA margin than 27.3%. And in terms of free cash flow analysis, I have assumed free cash flow as a percentage of EBITDA is 65%. In reality, in the past, it's been much higher. And even applying these conservative assumptions, I get an IRR of 15.6%, which is quite a strong IRR. So that was fundamental analysis on Baidu. If you did like what you saw, then please do like and subscribe to this video. Please do reach out to me and ask questions, and I will aim to answer them as quickly as I can. Until next time, thank you so much for watching. Bye now.